everybody, I wanted to provide a market update on blockchain economics. What is going on at the moment? Let's put on our mindset of innovation, because someone is going to invent the Netscape and Google of blockchains, finally a killer app that makes this technology usable and useful. First of all, the Scaling Bitcoin conference held at Stanford at the beginning of November 2017 featured papers in 4 main themes: privacy, scalability, cryptography, and smart contracts. So the first idea is that more and more we're moving to privacy on chains, both in the enterprise chains and in individual chains, using ZK proofs, zero-knowledge proofs. And there are very many different proposals for how we might do this. The idea of bullet proofs is that we have a very small logarithmic signature by which we can confirm and capitulate and secure transactions. But the idea is that more and more we would be expecting confidential transactions, that the sender and recipient address and transaction amount are hidden in the transactions that we're conducting, whether on private networks or public networks. And Ethereum has recently announced the integration of ZK zero-knowledge proofs on their chain, and we would be expecting this kind of functionality to become accompanying all kinds of enterprise and personal individual chains. The second idea is scalability, that we'll be having thinner and thinner clients by which we can easily submit blockchain transactions. There is a new explorer called BlockSci. It's a platform that you could pour any chain's data into and analyze the activity on that chain, and the other kinds of ideas for greater scalability of the blockchain. This is especially important since we just forewent the hard fork upgrade now in November to SegWit 2x, although we did move to SegWit already in a soft fork in August, which allows Lightning's payment channels. The third point would be about cryptography, that we're using elliptical curve cryptography currently. We're possibly moving to Schnorr signatures and beyond to quantum cryptography. And then finally, that smart contracts, payment channels, these kinds of consumable, escrowed, contractual arrangements over time are very much an up-and-coming area of development with blockchain systems. The blockchain investing is progressing at par. The first key point is that cumulatively, ICO's initial coin offerings have raised more money than VC funding in the crypto space. Although we should also mention that perhaps some VC money comes via ICO, but the two main classificatory measures, ICOs versus VCs, indicate that cumulatively ICOs have raised $3.5 billion, whereas VC fundings have raised $2.7 billion in the period from 2014 to present, to October 2017. The key idea is that ICOs have forever changed how we think about fundraising and interacting with our investments in projects and companies via the concept of token. So a token is not just money, but it has very many functions. It is also used for voting, dividends, access, participation, and notification. And so the idea of a token that has multiple functions is an idea that is probably here to stay. We know that in July the U.S. ruled on ICOs that if they are evaluated on a one-by-one basis, and if they bark like a stock, then they are a stock, and they must be registered as a stock. And so a lot of this really separates the wheat from the chaff, in that perhaps 99% of ICOs are poor quality, and 1% are registered with the SEC. They may qualify for a small issuance exemption, but they are a bona fide regulated offering. Other countries have have different stances on ICOs. The UK is not ruling, they're banned in China. Germany recently indicated they're dangerous, warning investors. Russia said they'll have something to say by year end. So it's very much a national jurisdictional kind of situation. The cryptocurrency market cap is currently $200 billion. These are all of the cryptocurrencies. Bitcoin is half, $100 billion market cap. And together, the 200 billion is on the order of a 50th largest country economy. So still tiny compared to the S&P's $22 billion, it's nevertheless a substantial amount. The third point is that we're starting to see more institutional products in the investment space. LedgerX options, which cleared $1 million worth of business in the first week and $2 million in the second week. And upcoming Bitcoin futures expected both on CME and CBOE. So this is significant because there is huge demand for cryptographic assets by institutional investors, and they could really start engaging with this product. Private chains are also starting to enjoy more and more activity, particularly Monero and Zcash, and people using the Shift Bitcoin Visa card, which has a live connection to the Coinbase account. Crypto transactions typically run at 1% as opposed to credit card transactions running at 3 to 4%. So I think one thing we might start to see is the privacy pendulum swinging back towards having more privacy after this era of surveillance that hasn't really worked out well when we have big breaches like Equifax. Privacy is just the first battle, in my view, and the larger stakes over the 100-year time frame are those for societal structure. We may see different and emergent ways for how our society is organized. The crypto enlightenment is well underway. We're implementing the economic piece, and the government piece is also there, where per Kant, he urges us that we ought to think autonomously, free of the dictates of external authority, and perhaps cryptographic voting systems and governance models may enable us to do so. Thank you.